Imagine this. You're sitting at your desk, staring at a green line graph as it climbs higher and higher. That tiny amount you invested last year is now worth double, maybe triple. You lean back, smiling, knowing that you didn't just make money, you built wealth. And here's the best part. You did it on your terms. But what if that line had gone the other way? What if, instead of gains, you were facing losses? Your hard-earned money, gone in a matter of days. It's a story we hear all too often, yet, it doesn't have to be. Welcome back to PF Knowledge Hub. My name's Ernest, and my goal today is to help you avoid being just another statistic. Because here's the harsh truth. About 80% of beginner investors lose money when they start out. But it's not because they're not smart enough, it's because they don't know what they're doing. And that's what we're changing today. These greats didn't become wealthy by luck, they mastered a skill. And today, we're going to start your journey to mastering that skill. I'm not here to give you stock tips or quick tricks. I'm here to teach you the foundation of successful investing. Whether you're brand new or have a little experience, I guarantee this video will offer insights and strategies that can shape your financial future. Why should you invest in the stock market? The stock market has long been one of the best tools for building wealth. Did you know that, over the past century, the S&P 500 has delivered an average annual return of around 10%? Since its inception in 1926, the S&P 500 has produced a 10% average annual return, making it one of the most reliable long-term investments in history. If you had invested just $1,000 in the S&P 500 in 1980, it would be worth over $76,000 today. That's the power of compounding. But the key is understanding why the market grows and how to position yourself to benefit from it. Think of the stock market like a tree. As you nurture it, it grows stronger and larger. And those branches? They represent opportunities. Opportunities that can yield you fruits of financial success if you're patient and strategic. But why invest in stocks at all? Why not just save your money? Because here's the reality. Cash loses value over time. With an average annual inflation rate of about 2%, the purchasing power of your money erodes if it just sits idle. Let's put it into perspective. A cup of coffee that cost $1 in 1980 now costs $4.50 today. That's inflation at work, chipping away at your savings. So, savers, in a sense, are losers. But investors? They're winners, because they're letting their money work for them, growing and multiplying over time. The journey to financial independence. I started investing because I wanted freedom. Freedom to spend time with my family, to pursue my passions, and to build a legacy. I remember when I made my first investment, it wasn't about the money, it was about taking control of my future. There were sleepless nights, mistakes, and moments of frustration. But with every failure, I learned something invaluable. And now, I want to pass on those lessons to you. Because the truth is, anyone can achieve financial independence if they're willing to put in the work. Financial independence means reaching a point where your investments generate enough income to cover your living expenses. It's the freedom to work on your terms or not at all. The FIRE, Financial Independence, Retire Early, movement has been growing, with thousands of individuals retiring in their 30s and 40s because they mastered the art of investing. Sounds amazing, right? But to get there, you need to start with the basics, and that's what we'll cover next. Understanding stocks. The building blocks of wealth. A stock is simply a slice of a company. Think of a company as a large pizza. Each slice represents a share, or your ownership in that company. The more shares you own, the larger your stake. And as the company grows, so does the value of your slice. That's why buying stocks of companies with strong growth potential is key. Growth stocks are like the young, energetic startup founders. They're ambitious, high risk, but can offer huge rewards. Value stocks? Think of them as wise elders, underappreciated but solid. And income stocks? They're the stable earners, providing consistent dividends, much like a dependable paycheck. Understanding these categories helps you make informed decisions. But it's just the beginning. Next, we'll dive into the factors that determine a stock's value. Analyzing stocks. The secret to smart investing: when you look at a stock, don't just look at the price. That's like judging a book by its cover. To really understand a company's worth, you need to look at its financial health, its P/E ratio, its debt levels, its return on equity, and so much more. Take the P/E ratio for example. A high P/E ratio might indicate that a stock is overvalued, or it might suggest that investors expect high growth. Context is everything. That's why we analyze to find the value hidden beneath the price. The art of diversification investing is like walking a tightrope. You don't want to put all your weight on one side, or you risk losing balance and falling. Diversification is about spreading your investments. Remember the saying, "Don't put all your eggs in one basket"? Well, in investing, it's not just a saying, it's a golden rule. Studies show that a well-diversified portfolio can reduce risk by up to 30%. By holding a mix of stocks, bonds, and other assets, you protect yourself from losing everything if one area of the market takes a hit. Strategies for success. From beginner to pro, I didn't become a successful investor overnight. I spent years studying different strategies, from dollar cost averaging to value investing, from technical analysis to dividend growth. I've read hundreds of books, made countless trades, and learned from every mistake. And that's why I'm sharing all this knowledge today, so you can shortcut that learning curve and start succeeding faster. Real-world example. Buying and selling a stock together. All right, now it's time for the real deal. Let's buy a stock together. We'll use Microsoft for this example. Notice how I'm setting a limit order instead of a market order. Why? Because a limit order allows us to buy the stock at our desired price, not just any price. And there you have it. That's your first step toward becoming an investor. Now, let's discuss when to sell. The emotional side of investing. Investing isn't just about numbers, it's about emotions. Fear, greed, excitement, anxiety, you'll experience it all. But the key is to stay calm and make decisions based on logic, not emotions. That's why having a plan is crucial. Stick to your strategy, trust your research, and always remember why you started investing in the first place. Taking action. Your financial future starts now. You've learned a lot today. You now have the knowledge to start your investing journey. But knowledge without action is wasted. So, take that first step. Because your future isn't decided by chance, it's built, step by step, decision by decision. Welcome to the world of investing. Let's build that wealth, together. Subscribe, like, and share to help others start their investing journey.